more Bitcoin, your premium to NAV goes down. If Bitcoin goes up, your premium to NAV goes down, right? So in order to stay at a constant 2x premium, if you will, every time you buy Bitcoin, the share price has to ratchet higher, right? So it takes more and more capital. So that's why I think there's a sort of a natural trend towards a winner take most dynamic.
Yeah,
is because the liquidity you need to sort of maintain a consistent premium.
In the upcoming chapter of Bitcoin, exposure is no longer the only factor. It concerns surviving in a battlefield where accuracy and speed are crucial. Bitcoin stocks are becoming more than just price wagers. In a brutal arena where inefficiency is immediately penalized, they are leveraged plays. It is not only risky but also hopeful to purchase Bitcoin-related equities at a premium to their net asset value, or NAV. You're betting not just on Bitcoin per se, but also on the market's continued support of that exaggerated estimate. The equation becomes harsh the moment Bitcoin pauses or spikes in an unpredictable manner. This is framed by Leclair as a fight against financial gravity. It's not easy to hold a premium. It's a continuous run. For businesses to keep a premium while adding more Bitcoin to their balance sheets, they need to attract new funding and unrelenting bullish momentum. The premium falls apart in its absence. Investors lose ground, and the value thesis as a whole crumbles under its own weight. Given the thinned liquidity and uncompromising volatility, it's a high-wire act with no room for forgiveness. Because of this, a winner is expected to endure the most bloodshed. Only the most shrewd, fluid, and reliable players will make it through. The others will destroy themselves long before Bitcoin has the last say. The key query, therefore, becomes, when do you purchase Bitcoin? When does the high-end noise subside? When does the leverage stop? When do the pretenders begin to unravel? At that point, Bitcoin regains its purity, unforgiving, unrefined, underappreciated, and that's when you hit, because Bitcoin doesn't wait for anyone in this next stage. It will be completely brutal. To learn more, stay tuned as we present additional snippets from Dylan's startling interview. Remember to subscribe, like, and turn on notifications. For more in-depth material, we appreciate your return. Watch the remainder of the video.
To be frank, I think we're still in the grand scope, the grand scheme of history. I think we're still in the early innings of, the Bitcoin corporate adoption story, even though, all of the Bitcoiners, if you will, in our own echo chamber are like, oh, okay, guys, this is really frothy. The reality is like the rest of the world actually simply doesn't care.
Mm-hmm.
So I think it is pretty early, despite, what everyone sort of believes is, everyone thinks it's reaching a fever pitch. But I think if you step back, it's actually, we're still, in the huge pools of global capital, we're still, this Bitcoin story is still pretty small. Yeah. I think it's a constant like fight with gravity, if you will, above 1x MNAV. You just think of the math and the mechanics, right? Like if your stock's at, a 2x premium and the stock price is flat and you buy some more Bitcoin, your premium to NAV goes down. If Bitcoin goes up, your premium to NAV goes down, right? So in order to stay at a constant 2x premium, if you will, every time you buy Bitcoin, the share price has to ratchet higher, right? So it takes more and more capital. So that's why I think there's a sort of a natural trend towards a winner take most dynamic.
Yeah,
is because the liquidity you need to sort of maintain a consistent premium, especially as you scale a treasury ideally exponentially, right? Like for instance, a 5x premium when Metaplanet was a $10 million company was $40 million of value, or when we were a $50 million company or whatever whatever kind of math you want to do, is really, really small in terms of the value. Right now, Metaplanet's I think we're a $5 billion company, right? So at a 3x MNAV, that's billions of dollars of premium. Strategy is at a measly 1.8x premium, but the premium is like $50 billion of value, right? So in absolute terms, this is a massive, massive scale. And so everyone's like, well, the premium's as compressed as it's ever been. It's like, well, in fiat dollar terms, it's as large as it's ever been. So I think, there's people often are like, and we've seen this with analysts, kind of across the board in the treasury sector, people are comparing a company or companies that are 2 orders of magnitude in different size, right? And so I think, the expectations have to sort of be set there where just the magnitude of like, okay, well, if you do your job and you execute well as a treasury company, the scale quickly approaches billions or tens of billions, right? If you can execute. And so, from that point on, maintaining, that sort of premium One, it requires a lot of liquidity, and then two, it requires sort of a kind of a dominant monopoly or a near sort of monopoly on your markets, liquidity, the Bitcoin vision. Part of I think why we were so successful early on, and I think still to this day, is that Japan, there was no Bitcoin exposure narrative or story or really I would say like visionary belief, right? Like when Sailor burst onto the scene in August of 2020, why did Bitcoiners rally around him, right? Because we were sort of all in our own little echo chamber, speaking the same language, and then some billionaire shows up on the Nasdaq and is like, there is no second best, and everyone's like, oh my god, And so I think there was somewhat of a parallel or like an analog there for us in Japan. There was no one. Everybody, if you believed in Bitcoin or crypto, you believed in digital asset Web3 blockchain isms, and that's not what we stood for. So I think that was part of the reason that we got such a jolt of a start. But in terms of like the U.S. markets, right? How many billions of dollars of Bitcoin exposure currently exist in floating? And that's a lot, right? And I think there's now sort of like private Bitcoin that is being taken public. 1,000 Bitcoin. That's 16,000 Bitcoin of demand that didn't exist prior. It was trapped in the equity market. There wasn't exposure. We raised $1.6 billion and bought $1.6 billion of Bitcoin, right? So I think that just because of, the marginal sort of supply and demand, there's going to be, amongst the hundreds of companies, there's going to be sort of a natural, winner take most dynamic. But I think really the scale, ultimately, the real moat here, one is there's brand, right? There's a Sailor premium, in the same way that there's an Elon premium or there's a Steve Jobs premium back in the day. But the real moat here is, I mean, it's not just having a public company, right? Like a year or two ago or three, if you were a public company in the Bitcoin or crypto space, like that was a real differentiator.
Yeah.
Now there's a lot of crypto companies, and I think it was the ATM, right? The ability to raise equity at the market. Like if you've operated in public markets, raising money is a grueling game. It's like nonstop legal, regulatory, investor meetings, nonstop, no sleep, especially if there's like, sort of like, a private placement or convertible bond process where there's like a 3-day sprint window where it's nonstop meetings, roadshow, like it's grueling, right? And so, but the ATM, you get it live and then I don't want to say it's smooth sailing, right? But you do the hard work up front and then the process gets, very much, it's easier throughout, right? Than constantly raising money. And so for a while, there was sort of a monopoly. Sailor was the only one in town doing this, right? And now I think there's, too many to name that are selling equity at the market to buy Bitcoin. Now, increasingly, there's some crypto digital asset companies, which is interesting. But I think, that's the real moat here is not just issuing equity to buy Bitcoin. The real moat is, can you hit a scale in absolute terms of Bitcoin exposure where you can access the fixed income markets?
Mm-hmm.
And I think, Sailor and MSTR are to this point, the only company that's hit that scale. Even convertible bonds, right? The convertible bond process it's long, it's grueling, it's heterogeneous credit, right? So every convertible bond has a new process, has new terms, and the investors don't actually believe in you, or your story, or your company, right? Like the convertible bond investors, they'll woo you and they'll talk a big game and they'll talk about loving your vision, and then they short sell 60% of the money they put down to hedge.
Mm-hmm.
Like they're not actually even net long at all. They're just farming volatility, right? So like they're not your friend. And I say that's no diss, right? Like that's their business. They're in the business of trading volatility. That's fine.
Bitcoin has evolved from a side project. It's subtly evolving into business strategy. What started out as a daring move by a small number of businesses is now becoming a global trend, with businesses from all industries and geographies amassing Bitcoin without the need for news releases. Bitcoin is making its way into balance sheets as a significant asset, from tech companies in the US to public markets in Japan. The shift is genuine, even though it isn't noisy. Additionally, Corporate adoption's initial phases have formally begun. Although altcoins may offer yield, the comparison to Bitcoin is unbalanced because to dilution, fluctuating protocols, and shaky foundations. In the meantime, corporate finance regulations are being subtly altered by Bitcoin. Since preferred equity allows businesses to grow without dumping shares, it has become a more intelligent instrument than convertibles. Equity alone isn't the true reward. The credit markets are the cause, the deep capital is located there. A new financial standard based on strategy, scarcity, and sincere belief is emerging as Bitcoin enters those channels. Let's check other interview snippets.
But with this preferred stock, you know, I guess just with the preferred equities that Saylor's laid out, I didn't really see that vision wasn't clear to me until the first one rolled out, and then the second and the third, and then it's sort of like an aha moment. Like convertible bonds were never the end game. Like I thought the magic innovation was, okay, you can lever your balance sheet with Bitcoin volatility and access 0% cost of capital. But now it's really clear that that process was a bit clunky, and it's also like the relative pool of capital for convertible bond arbitrage is pretty small, versus fixed income. Broadly, I know that's a broad stroke term, but the fixed income markets, like the true fixed income markets, are absolutely massive. And so, so when Saylor said we're going to go for every pool of capital, investment grade, junk, long duration, short duration, and now we're seeing that take form. So I think that's really that's really the only moat that exists for the Bitcoin treasury companies. And so I think implicitly, I don't know if anyone has sort of said it out loud, but really every other company but Strategy, I think, is in a race to hit that scale to be able to access that market, because you can't issue preferred equity with $100 million of collateral on your balance sheet, because that's not interesting. Because you issue $20 million of fixed income preferreds, it's not worth an invest. It's like a real big investor isn't going to take the time to look into it, to trade it. It's not liquid enough, So you have to hit a scale to be able to access those capital pools. And I think that's the real monopoly. That's the real differentiator for the one company versus the 100th company. Well, let me clarify that. It was no, taking the private Bitcoin public statement. There's no slight at all, right?
No, not
I
at
think
all.
the more Bitcoin in public markets, the better. And I'm a huge fan of both Jack and Adam. I spoke, actually, coincidentally, I've had fireside chats in Amsterdam with both of them, 2 separate years, before any of this unfolded. So I'm really close with them, and it's really awesome to see your friends winning. With that said, I think that I think Saylor's reached escape velocity. I say that in the position of a public company, we have aspirations to catch Strategy. Is that feasible? I guess we'll see. But I think 600,000 Bitcoin lead, more or less, is pretty insurmountable. And so we will see. I think the beauty of it is Michael is welcoming the competition and cheering for them and retweeting them. And I don't think I've really, I'm young, but I've thought pretty deeply about any sort of precedent where a titan of industry is openly welcoming, cheering, and platforming all of their competition, and I can't find a parallel. So that's really interesting. But no, I think the higher the Bitcoin price goes, the more the moat solidifies, the more they can access the fixed income market. Repeat, rinse, repeat. So yeah, I mean, the really, like, the only way that it's probably not a Bitcoin industry incumbent, right? That if there is a potential challenger, like, if Mark Zuckerberg took the orange pill tomorrow, could he get close? Well, probably. I mean, Facebook has, Facebook makes $100 billion a year or something, right? So, or whatever the numbers are. So yeah, I mean, that would be interesting, right? If Mark Zuckerberg took the orange pill, fired up an ATM, and said, we're going to issue $10 billion preferred, that's an interesting story, but I don't think that's happening. I think the incentives aren't there. Just to, go all in on Bitcoin when so many other things are happening, right? AI and everything else. So I think, if I had to put my money on it, I would say overwhelmingly that MSTR is in the lead, just probabilistically 10 years from now, but we will see how how it plays out. I mean, it's definitely a metric. It's probably one of the more important ones. But I think often people are looking at this, in a static form, right? So, for instance, what was it? A few months ago, Metaplanet's, let's say April, right? Metaplanet had a premium to net asset value of 3,
Mm-hmm.
and the share price was, $4, right? Metaplanet now has a premium to net assets of 3, and the share price is $8.80, right? So, that's 3 months, and the stock was, remarkably overvalued by the traditional analyst perspective, and now it's the same valuation, but it's repriced, over 2x higher. And so I think, I say that instead of one snapshot, I give you 2 snapshots, and I would, pose an analyst or someone someone from Wall Street to say, okay, well, how did this happen? Right? It's repriced twice as high, but it's the same relative valuation. And so, there is somewhat of a forward-looking aspect here. The static premium to net asset value isn't considering, all of the future that's baked in, right? Equities trade at, a forward expectation of future, cash flows is traditionally what it says, but it's really just forward expectations, right? There's a reason why Palantir trades at, 100x revenue, and, Amazon traded at 100 times earnings for 20 years. And right, it's pricing in the future, not the now. And so, a Bitcoiner looks at strategy and they say, okay, well, they've generated $10 billion of BTC gain. And BTC gain, not as, the price of Bitcoin has gone up, but, the BTC dollar gain metrics they've put out, or BTC yield, is saying, well, what value have you generated net, no dilution? So let's if you issued $10 billion of common stock at a 1x MNAV, you would have 0 BTC gain, right? There's no, no additional value is generated or accrued. And so, if you have a company that's generated $10 billion of value, that's worth something. And so the equity markets are rational, and they price, they put a forward multiple on that. And so I think that, there's an entire industry of analysts that are trying to figure out what this is all worth. But that's sort of, the Bitcoiners at the same time that, everybody's investing in these equities. It's going up against the traditional world that has always looked at forward expectations, not the now.
The speed at which corporations are adopting Bitcoin is faster than most people anticipated. In just 6 months, public organizations' cryptocurrency holdings have increased 77%, hitting $160 billion by the middle of 2025. What started out as a daring outlier move by companies like MicroStrategy is now spreading throughout many sectors and regions. Digital assets are currently listed on the balance sheets of more than 160 businesses. The change is being fueled by strategy as well as ideas. Bitcoin is becoming more and more regarded as a better treasury reserve asset that provides stability. In erratic macroeconomic circumstances, this change is consistent with Dylan's overarching argument. Not only is Bitcoin succeeding, but it is also penetrating the most profound facets of conventional finance. He has long maintained that the credit markets hold the true value of Bitcoin, even if the equities markets were the first significant capital pool to embrace it. Preferred equity is one tool that enables businesses to generate money and purchase Bitcoin without putting their common shares under a lot of sell pressure. Preferreds offer a clearer, more calculated route than convertible bonds, which frequently lead to backdoor dilution. More than just opportunism is reflected in what is currently taking place. Businesses like Metaplanet and Robinhood aren't only following trends, their balance sheets are being reorganized in light of Bitcoin. The public markets are paying attention and rewarding these actions with increases in investor confidence and valuation. This movement has the potential to completely reshape corporate treasury management. According to Leclair, Bitcoin is a macro strategy as well as an asset, and those who can use its financial mechanisms will influence capital allocation in the future. Which public corporation do you believe will be the next big buyer of Bitcoin? As we come to a close, please share your opinions in the comments section below. Please use the like button and share this video. Thank you for viewing, and please remember to subscribe.